Within today's backdrop of elevated uncertainty, how do investors position their portfolios for the potentially winding road ahead? Hi, everyone. I'm Joe Duffy, Managing Director and Investment Specialist, here with today's episode of the Harbor Lookout. Now, as we've rounded toward the back end of 2023, investors have arrived at a crossroad of uncertainty. Current S&P 500 valuations now rest almost one full standard deviation above their 20-year average, while interest rates remain elevated and volatile, and equity risk premiums have shrunk to multi-decade lows. U.S. equity and fixed income correlations have risen back to the elevated levels experienced in 2022, and the S&P 500 Value Index has stylistically drifted into blend, and the S&P 500 index has drifted toward growth. With everything appearing to look, feel, and behave the same way, investors are likely best served adding enhanced layers of diversification within their portfolios moving forward. Now, commodities represent a compelling long-term opportunity to reduce the aggregate volatility of 60/40 portfolios while adding a potential source of differentiated returns, particularly within a backdrop of rising stock and bond correlations and heightened geopolitical instability. U.S. investors are also generally underexposed to non-U.S. equities and could likely benefit from the enhanced style and sector diversification they tend to provide. Non-U.S. equities also trade at steep valuation discounts generally to their domestic counterparts, tend to contain some of the world's top performers year to year, and may likely benefit from a longer-term dynamic of dollar weakening looking ahead. Now, when all of the mainstream investment highways appear to lead in the same direction, investors are likely best served taking the roads less traveled within other asset classes. Most importantly, Harbor Capital Advisors is always here to help guide you along the way. Thank you very much for your time, and tune in to our next episode of the Harbor Lookout.